Property Pulse.
With Espace Real Estate. Think Dubai Real Estate. Think Espace Real Estate.
And Richard Dean is going to be asking John Lyons, the Managing Director of Espace Real Estate, about how all those different macroeconomic factors that we're looking at the moment, tariffs, global uncertainty, the potential of a recession, lower consumer sentiment, lower dollar, good for property arguably, for foreign investors, and the rest of it all fits together for our property market going forward. But before we do that, we have a set of numbers that have just been put together by the guys at Espace Real Estate. And we're always interested in their take on what they're seeing on the ground. It's your Q1 report, John. Thank you very much.
Yeah, thanks for having me.
And no spoiler, although the demise of the Dubai real estate market has been widely predicted, that it has not happened in Q1.
Yeah, Q1's has been a good quarter for the Dubai real estate market. We've seen ongoing growth both year on year and quarter on quarter in the secondary market, but we have seen lower levels of activity in the off-plan market on a quarter on quarter basis, but not on a year on year basis where it's still up.
That's my first question, actually. So if we look at the total residential sales, whether they're secondary or off-plan, they're up compared to Q1 last year, so year on year. But as you say, compared to Q4, it's down. Is that a Ramadan effect?
I think it could be, partly. Obviously, Ramadan was in March, so that could have had an impact. But also, I think there is potentially just slightly lower levels of speculative demand in the market now compared to the end of last year. Not dramatically so, but I think it's clear to say that the market is not going to go up in a straight line continuously. It has to get to some level where investors start to take their foot off the gas a little bit. It's still very strong because, as you can see, if you look year on year, it's still much higher than it was, but just not quite as high as Q4 last year.
One of the other numbers that really jumped out at me was the total off-plan completed units for Q1, 7,000. That's actually down 15% on Q1 last year. What do we take from that?
Yes, it's not a big number. The pipeline still looks very healthy, but obviously, as we've talked about previously on the show, what is expected to be completed and what actually gets completed are two different things because delays do occur. So it's not something you can look into in too great a level of detail, I don't think, when it's just one quarter. All you need is a couple of projects to be delayed a couple of weeks and it goes into the next quarter. But it's still healthy numbers of properties being supplied to the market, just not as much as was the case previously.
Let's look at the communities you track, because I'm always interested in the numbers that we can only get from you. And you do this every quarter, don't you? You have a certain number of apartment and villa and townhouse communities that you look at. If we look at rentals for both villas and apartments, there's a lot of red arrows in the new contracts, in the transactions overall, not in the price. The prices are very green, but the activity is red. Tell me.
Yes, so we're seeing that ongoing trend. Price is up in the rental market and number of transactions, both new transactions and renewals, are down. But at the same time, while we see less rental transactions, we see more transactions in many communities to buy properties for sale. And I think we're seeing this rotation from being a tenant to being a homeowner, if you can afford to do so. And a combination of factors are helping to fuel that rotation from a market that is more owned by investors to becoming a market that is more owned by end users. And lower yields and higher prices is encouraging landlords to take this as an opportunity to sell, and high rental prices and a longer term outlook among residents is an opportunity for tenants to become longer term buyers of real estate. So both of those things are helping to fuel that trend of tenants becoming homeowners.
I was still really surprised to see so many red arrows, because I would have thought that with the amount of new people coming in, they're not necessarily going to be buying a new home off the bat. You put your feet under the table, you make sure that the place suits, you're looking for property, if nothing else. Could there be anything else behind those red arrows?
Yes, well, if you look at where the red arrows are, they're in quite a lot of the most well-known and well-established communities. So it is the case that prices there are very high in the rental market. And as new communities come out of the ground, which are not always tracked by this report, you see some rental demand now going over to the new communities that are further afield. And that will be some of the story that you see in the numbers.
If we have a look at sales prices, again, green arrows, green arrows, green arrows, 2 communities in which the arrows were not green. And I would argue 2 communities that get an awful lot of press, Talal Al Ghaf and Palm Jumeirah, down 10% and 5% in your numbers. How come?
In terms of price?
Yeah.
Yes, I mean, again, from one quarter to the next, when you look at a community-specific level, it could tell you a distorted story. You need to look over a larger period of time. I think it's better to look at the overall picture. So when we look at the 19 out of the 20 communities that we track in the villa townhouse market, we see green arrows and we see prices, average prices up. And the average is up about 23% in the villa townhouse market, and it's up about 10% in the apartment market. So we are seeing greater price appreciation in the villa townhouse market compared to the apartment market, which is what we expected to see, given that the majority of the supply pipeline for Dubai is apartments, and it is still quite an undersupplied market in the villa townhouse market. But at a community-specific level, just one quarter, it's a little bit difficult to tell.
Okay, let's have a look at my favourite page. It's the last one on the entire report, but it does tell me what you guys are doing on the ground. There's been a 64% increase year on year for property listings. Is that new stock?
Yes, it's a lot of new listings, a lot of, as I said, a lot of landlords that are seeing yields compress, seeing it as an opportunity while prices are high to decide to sell those properties. So we are seeing new listings coming to the market. Fortunately, we're also seeing buyer registrations higher, and we're seeing good transaction volume. For Espace in Q1, we were 29.1% up for our revenue. And therefore, we're very positive about the fact that as these properties are coming to the market, we are selling them.
And yet, the average sales price that you guys dealt with down 16%.
Yes, that's more to do with the story of our growth as a business. We had 26% more people contributing to our revenue in Q1 this year compared to last year. And most of those people are operating in areas where the average prices are lower. These are some of the emerging communities. So while we're still very active in the luxury segment of the market, a lot of our new incoming brokers are operating at lower price points, and that's bringing our average down.
Have you been on a hiring spree, John?
We have been. Many people. Yeah.
I'm genuinely interested. Are you taking people from outside or inside?
Both outside and inside. We have different levels within the business. We also have fixed salary positions in the business now at apprentice broker level and at graduate scheme level.
Why have you done that?
We've done that to lower the barrier to entry. We found that there was very good candidates that didn't see Dubai real estate as a commission-only industry being that attractive, and to give access to those great candidates and for us to basically offload the risk from them onto us. If we choose the right people, we know they'll deliver the results.
That is fascinating, because commission only has been the Dubai real estate model, hasn't it, for brokers? Eat what you kill. Are you saying that is no longer attractive to some of the brightest people?
It is attractive, but what we find is that not everyone is a risk taker, and there are some very good salespeople who are not risk takers. So therefore, they see commission only as a barrier to enter this market. And we want to make sure that we are open to a wider audience of talent. And by offering different packages, it allows us to make the job opportunity attractive to people that just don't want to take that level of risk.
Do they take a different commission as a result?
Exactly. They take a lower commission rate as a result up until a certain period, and then they get the option to transition into a commission-only role, which, to be honest, we expect many of them will do once they know and feel confident that this is the right environment for them to sell. Then we see people that will transition into commission-only roles.
Interesting. Right. I'm going to hand you over to Richard Dean to talk about some of the macro factors weighing in on the markets going forward. John Lyons is the boss of Espace Real Estate, speaking to us this morning. Let's take a quick look at the roads.
Dubai Eye 103.8 traffic.
With Yas Island Abu Dhabi. Stay at iconic hotels and play at record-breaking theme parks. Book now on yasisland.com.
Yeah, still pretty clear on the roads of the UAE this morning. Busy, of course it is, 8:45, but no major incidents.
Dubai Eye 103.8 traffic.
Right, quick competition for you this morning. Arabian Travel Market. Speaking of roads, is coming up. It will take place at the Dubai World Trade Centre from April the 28th to May the 1st. It is the biggie when it comes to our events here in the UAE. We're giving away 50,000 IHG One rewards points for fabulous hotel stays. And what we're doing is we're asking you to tell us where a beach that sounds as beautiful as it looks is located. This morning's beautiful sounding beach is Starfish Beach. Tell us what country it is in. 4001 or 04871 5500. Don't forget to pop your name on that message as well.